Is this 100?
I didn't even give you a countdown.
Is this 100?
It is episode 100. Yes, it
Oh,
is.
nice. All right, here we go. Ready?
I'm keeping it in.
Welcome, welcome everybody to the Chinchilla Pickin' Podcast. It is February the 7th, 2023 at 7:16 p.m. As always, we hope that we are entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am joined by Brandon Beaver. Brandon, it is episode 100.
100. Woo! Yeah, we didn't plan anything for this.
Nothing special. We are boring. I'm sorry, but 100. We talked about planning something special, but then I don't know what, we got busy or something.
Life happens.
Life does happen. But it's 100, guys. We have been out here getting together one day a week, actually some weeks more than one day a week, and putting out information and episodes for you guys, for you listeners. We appreciate everything that you guys have followed us from I think the first 3 months we had 5 listeners a week.
Yeah.
It was probably family members.
Yeah.
That was it. So
well, at one point I looked at our stats and I was like, not a single female had listened to us an entire month. I was like, Mom, how are you?
Right? Hey, come on. So we have grown and we appreciate it, guys. We're here just putting this out for you guys and to help you maybe grow a little, learn a little, be educated a little about what's going on in the markets. We have years and years and years of experience. We are old, and sometimes we know what we're doing. And we like to share our knowledge and what we learned in our experience with all of you guys. And we appreciate the support you guys give us just by following us, just by hitting that little subscribe button. So if you're listening to us on whatever streaming service you listen to us, hit subscribe. Go ahead, just click it, hit like. That's how we get that organic growth. And we appreciate that organic growth.
Yeah, we're on platforms we don't even know about.
We are. Yeah, I know that it is weird how people find us sometimes. So it is what it is. It is what it is. I will talk about today's show, man. Episode 100. The rules have always been the same. Rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You actually hear the live discussion here on the show. I think we got together 1 minute before the show, and we just started hitting record. So it's going to be a really live discussion here.
I don't have anything. We've already done thousands of hours of content. What more do you people want from me?
I know, seriously. Like, I think we're at a point now, Brandon, to where we don't even need to like do the pre-talk. We could just go right in and record it, and it would be a good show.
I try not to like be so predictable because I feel like sometimes people could just listen to me and be like, yeah, the Fed sucks. It's gonna be a tough year. Markets are gonna have trouble raising rates and inflation.
I thought you were going to talk about like how you go deep diving into all these earning reports and you break down all the little nitty gritty stats that like we hardly ever talk about. You hear like once a year on CNBC, and you're like, "What's that stat mean?" You know what I mean? I thought you were going to go down that road.
Japanese pension funds moving.
Yeah, that I'm telling you, that is still the highlight of last year for me. Is you finding the Japanese pension fund that was moving the treasuries. That was the highlight, I think. That was good times on the show. All right, well, today's show we don't have anything really special, so we're going to talk about Brandon's allowing me to go first, and then he has a bunch of earnings and companies to talk about going on, but I'm going to talk about the headlines that everybody wants to hear about, right? And I know you were just saying, hey, you're tired of hearing about the Fed, but guess what, Brandon? I'm sorry, but that is what the headlines are today. You know, it is all about the Fed. So Fed Chairman Powell. He came on TV today. Man, we are just in a good mood, aren't we? He came on TV today and he gave some comments and talked. And Talked about a lot of things, but of course, the number one thing he talks about right now is inflation and interest rates, right? So I'm going to read two different headlines from two different sources. One headline says, Fed Chair Powell says inflation is starting to ease, but interest rates still likely to rise, right?
Yeah, so
Um,
growth of inflation's coming down.
well,
But
hold on.
go ahead.
Let me read the other site's headline. Ready? Fed's Powell says job strength shows inflation fight may last quite a bit of time. Two different headlines from two different sources. It just I just point that out to people so that it shows you like you have to like quit looking at headlines and you use a headline to determine if you're going to read the article. But read into the article because in both of these articles I read, one was on Fidelity, one was on CNBC. I'm not going to say which one's which, but when I'm sure most of you, if you listen to us for long enough, you can figure it out which is which. But if you read into the article, they actually start going in and breaking down what actual Powell's comments was, and what he talked about in both of them. Brandon, before we get into this, I just want to mention a couple things real quick, and then we'll delve into the inflation fight here. In both articles, he talks about how the jobs report in January was so good that it's definitely they're going to raise the benchmark interest rate to 5.25 rather than where it was before in the 4.5, 4.75 range. So now we're going definite 5.25 is where they're looking at a benchmark rate. And also because we're at a historically low unemployment rate. So before we get talking is that Brandon and I have been talking about this since fall of last year that we need unemployment to go up and we need the jobs numbers to quit being so rosy for inflation to come down. Do we need like a negative jobs number for inflation to start coming down? I'm on the edge about that, but we don't need 500,000 jobs.
Yeah.
That's not what we need. And we do need unemployment to tick a little bit higher. Even during the best positive markets of the last 100 years, we had like 4% unemployment. So it can tick higher and we could still be in a great job market. So 3.4 is just historically low. And it's way too low to beat inflation right now. Brandon, I know you want to say something. Go ahead.
Yeah, 3.4% was completely unexpected, at least for me. I didn't. So is the labor participation rate still declining? Because that could explain it. Like if people have stopped looking for jobs, they're not going to be counted in the unemployment statistics. So it's possible that actually brings the number lower.
It's so in all the articles I read today about the Fed and his comments and the interest rates and inflation, it wasn't they weren't job articles, so they didn't delve into the job numbers to see what the participation rate was. They just gave an overview, a quick high level view of the jobs numbers to explain why Powell was saying, "Hey, we're still going to have to continue to raise rates. Inflation fight's not over with." He is optimistic. That's why they went down to a 0.25, 25 basis points instead of 50 basis points or 75 basis points. But they did raise it to a 5.25 benchmark goal now of where they want to get to.
It doesn't really I don't know, something doesn't add up with the jobs number. I mean, I know there's a lot of jobs out there, especially when it comes to skilled trades. What they call them low skilled trades as well, which I hate that phrase because I don't actually believe it's true. But the retail jobs, you still go to the fast food restaurants, you get stuck in long lines because they don't have enough workers. And I think that's partially because of Uber and DoorDash. And, why would a college kid or even a teenager just entering the job market, why would they want to go into a high stress workplace when they can make their own schedules and deliver and make money on their own time with no boss? So honestly, I think that's part of it as well. And it seems like it would be a small percentage of the workforce, but I think it's enough to make an effect. Go ahead, Dave.
So CNBC, after the jobs numbers are released, every day that the jobs numbers are released, they come out with this report of it's a good article, and you should look at it the next time they have the jobs numbers out, and it says where are the jobs are at in one chart. And in it, they break down by sector where all the jobs were created. And the
Right.
number one sector was leisure and hospitality. So like restaurants and what you're talking about was the number one sector for job growth in January. So what you're thinking is true. In fact, that they had some of the biggest job growth in those areas.
Yeah, for sure. I just something doesn't add up, and maybe that's one thing that I'll research a little bit more and maybe dig into those numbers coming into the next week, next show that we do. Because it is just, I mean, I didn't expect a huge increase in unemployment, but I definitely didn't expect it to decrease right now either. I mean, every day you look at the headlines and there's layoffs coming from Meta or coming from uh, Google or whatever big company you're looking at. So it just caught me off guard for sure. I didn't expect 3.4. I expected more 3.6%. But that just means that the Federal Reserve's job's not done, and it means more tough times for the stock market. And it's a weird thing. Good news is bad news because it really is good news for the workers that it's 3.4% unemployment. There's still a lot of jobs out there. But it means no free money for the stock market. No, low interest rates. All that era is over for now, at least. Go ahead.
Yeah, the discount window is not open for 0% interest rate loans. If you don't know what a discount window is, guys, I please Google that, research that, and learn about it because it will open your eyes at how our financial system works with the government. But besides the point, how this the unemployment ties into inflation is I'm looking for an inflation number, and last time the inflation number came out, which is going to come out this month in February. Last time the inflation number came out, I was saying the market was going to run if we saw below 6%. We didn't see below 6%, but the market still moved up. And I was surprised, at the move up. It wasn't a huge move percentage wise, but points wise. They're like, oh, the market moved 500 points today. I'm like, yeah, but it's not even a full percent. You know what I mean? It's like, it's not even a full percent. So back, like people look at these big numbers like 500, 700 points, and they think back to like 2008 recession. I'm like, yeah, but the Dow was at 10,000 then. Yeah. Now it's at 30 some odd thousand. It's that 500 point drop in one day is not the same as it was back then. No. Besides that, all right. So besides that, today's off of the Fed, Powell came out and he made that announcement and he covered all the news and he did the comments, right? What we saw was the options markets for a few months out started exploding. Calls were being bought up. And people were expecting, okay, the market's going to start jumping up. I want to buy some calls now. And I was like, that's a little premature. I want to see an inflation drop below 6% before I start getting all excited. And it still has not dropped. That's I would like to see below 5.5% on this next one, but 6% would be a great number and I would buy in. We haven't seen that. It's still above 6% inflation, which the Fed has a benchmark goal of 2%. So it's still over 3 times the amount of the benchmark goal, and people are buying calls 3 months out.
Yeah, the casino's still there, isn't it? It's one of the things that kind of makes me think maybe we haven't seen market lows because people are still playing the casino of the stock market rather than investing. I was very surprised though to see that the largest portion of money that came in to buy the dip in the stock market back last year in June were actually retail investors. And so I think that, we've become a little bit more sophisticated as a society since the dot-com crash, at least, in order to buy, good stocks at good values when they're down.
Well, that's because they listen to Chinchilla Picking podcasts, and we were saying that going into it, saying you need to start this in May. We were saying, hey, start buying in because we think that this market's going to start taking off. Start buying as it's dipping down. Yeah. I'm just saying. Yeah,
and it took a while actually for a real good, meaningful move, but I've been happy since then for sure with my portfolio. Especially last month. Now, am I buying anything right now? No, I don't need to. I'm set. I'm good. And there's nothing that looks rather appealing right now. I'm literally just building cash on the side and waiting, for more opportunity to come. But
well, hey, I'm going to interject here because, all right, So I don't know if anybody has been listening to us for a while now, but I had a Tesla position and I am out of it, and I made a good amount of money off of it. So I have a lot of cash on hand, Brandon. I am looking to buy something, but I'm with you in agreement that I don't see anything right now that I want to really just pour some money into. I am sitting in cash because I'm waiting for an opportunity. I think the market has a good run up right now. And I think we're going to have a pullback once we see some inflation numbers and some actual numbers come in. We had a mixed bag of earnings today. I know you have some earnings to cover, but we had a mixed bag of earnings. We had Zoom cutting 10% of its workforce, eBay cutting some of its workforce today. So we did have more job cuts in the news. They're not getting the headlines they used to because it's not the bigger names like Amazon, Google, and Walmart, all those big names, but it is names out there. Chipotle came in and they missed earnings because of higher food costs. So inflation's heading these companies on the top line and bottom line. Chipotle missed on both. This is the first time since 2017 that Chipotle has missed on earnings. I mean, so that's a big miss on earnings for any company. That's a good streak to have, 6 years straight of not missing earnings, and all of a sudden you miss because of inflation.
Apple, same thing with Apple. Big miss
right?
on and revenue. Top
Right. So you can't go off these rosy headlines that I see out there that Fed Powell says inflation fight is winning. I want to see the numbers first before I start opening my mouth on that, before I start delving, putting my money to work here in the economy. I think this year is going to be a great year because eventually that inflation is going to take a dip. And once it does, the market's going to be ready to rumble. And you don't need to be the first one in. It's when they start moving back up, you will have plenty of time and opportunity to make money. Look for value companies now that you want to invest in.
Yeah, I agree. I agree with that. And it just but the other thing is too, if he's winning the fight on inflation, what's the side effect that's going to come from beating inflation back down?
Exactly. The side effect that should come is we should see a jobs number go lower. We should see unemployment tick higher. Yeah, unemployment tick higher, jobs number come lower, GDP contract. You should see those things. Historically, that's what we see. And I feel like there's something, I don't know. I don't want to be all Michael Blurry here and say that the market's being manipulated, but I feel like there's something underlying in here that we're missing that is propping up all these numbers.
Let me say this: Elon Musk said of Michael Burry that he's a broken clock, and I kind of agree with. He's a very smart guy, but I mean, the guy just tweeted out "sell" and then deleted his Twitter account right after that. Like no explanation. And sometimes with the Bears, man, nobody ever calls them out. Nobody ever calls out the perma Bears. They'll say every day, every single day, there's a recession coming. There's a recession coming. There's a recession coming. And guess what? There is, but nobody knows when it's going to come. We have the market cycles, right? So recessions happen. And when they do happen, they say, oh, I predicted that. But the problem is you predicted, 5 years ago. You said 5 years ago that it was going to happen. And so you really didn't know,
Here, I will say this. I was predicting after October, we would see the market, we would have a small recession in October. It would bounce back up, and I was wrong. We did see a bounce back up in October, but then it came back down again. And we still haven't seen a recession. So I was wrong in all those calls there in saying that. So I quit saying it because I'm like, you know what? I don't know. And I've been wrong twice now in trying to call this. I'm just going to quit calling it because I'm wrong.
Yeah.
And this is what making me think that there's something that I'm missing right now underlining in the market, Brandon. There's something I'm missing. I'm good. I'm good at day trading because it has nothing to do with underlying market manipulation or conditions. It has to do with the macroeconomic events of the day. So I could continue to day trade, but my long-term investments are suffering because what I see happening is not what should be happening.
Yeah, it's just the timing of it. It's so hard to predict. I do think that a recession is coming again. I do think that's going to happen, but I'm not selling anything and prepared, to prepare for. I might take some cash, just like from my savings account and then put it into investing. I might take it all out of my paycheck and put it in there just to have it aside when it happens. But I know what I own, and I know that it's more valuable than where it sits right now. And I know that I got it all for a great price. So there's no reason for me to sell, especially with my timeline being, 20 years out. Um, but I do think a recession's coming. It's one of the reasons why I'm not buying anything right now either. It'll just be more opportunity. That's what it
That's
is.
yeah.
When you get these stock market dips like we did June of last year, and we may have another one coming up this year, it's just, if you're positioned correctly, it's like it's raining gold. The gold will
Yeah.
pay off in the future, right? But
Yeah.
it is. It's giving you great opportunities. And look how many people said don't buy Meta, don't buy Metaverse. And when it's down in the 90s, people were yelling about how Meta's a broken company with a broken business model. And it turns out, guess what? It's still a cash generating machine. And now that it's doubled in price from its lows, so you're talking about headlines, Dave. I saw a headline, and I won't mention the name of the people that publicized it, but the name of the headline there was, "Now it's time to buy Meta." It's like, yeah,
I love these. It's like these analysts that get on TV, man, and they say all this stuff. They like I'll continue on your Meta example there. Everybody's dogging Meta, Meta, Meta until they come out with good news, and it's look how great Meta is, and yeah, we were positioned in Meta. I'm like, when were you positioned in Meta? The 100 times you came on TV and said it was awful,
right.
or are you positioned in Meta because you own some ETFs that own a tiny bit of Meta, and that's how you're claiming you're positioned,
Or did they go on TV and yell at people to sell Meta because they were trying to buy it for a lower price?
right? I mean, Kramer is as there's a YouTube video out there of Kramer saying that hedge funds do that all the time.
Well, he also just said that Google's business model was broken yesterday too.
What?
Yeah, he's I can't stand him. There's a whole show on this about my beef with Jim Cramer.
Yeah,
Probably a year ago. I don't know, but
we've done 100 of them, so it's in there somewhere.
yeah.
So what do you got? Let's talk about earnings. All right. So we've done enough about the inflation and Fed and all that. You got some earnings you want to cover. Let's get into it. Which one do you want to cover first?
Let's talk about Google. They announced
Google.
their new rival to Chat GPT, Bard. Now, have you used this Chat GPT before? Have you used it yet?
I have not. No.
Okay, I've used it, and it's not. Everybody's worried that Chat GPT is going to take over Google, and it's too tedious. It's interesting for 5 minutes because you can ask it about anything, and I think up until 2021, because I don't think it's been updated with new data. But you can ask it about almost anything, and it'll like spit out some informative article, and it can write poems and stuff like that. It's cool for about 5 minutes, but you don't use it as a search engine. Where the utility of this is going to be, because Microsoft has invested a lot of money into Chat GPT, and they've got a partnership now, and they're going to take Chat GPT and integrate it into its search engine and Bing, and that's where the utility will be, to use that chat bot to supplement your search engine. And then also, you can sell the technology to companies that you could use a little chat bot on your website, stuff like that. But Google's unveiled Bard, so they're going to have something to rival it and to use with Google.com, the search engine.
I so from what you're explaining here about Chat GPT, this sounds like it is just like if I search something in the Google search bar.
Yeah.
So there's no difference.
But here's the thing with Chat GPT, it gives you one answer, whereas if you go to Google, if you don't find the answer in the first article, there's like a list of 100 other articles below it to give you the answer.
Yeah, so I would never use this. I would continue using the Google search bar because I want the multiple selections and multiple answers to my problem. I never want just the top one. Because that's too ad centric. That's too like you can create your web page that you're trying to advertise or get views, and create it in a way that it's always going to be that number one that the AI robot finds. And then because the algorithm that the AI robot is using, and that's too ad centric for me. I would still use the Google search bar.
And there is some crazy and innovative stuff and sometimes scary AI innovations. For example, Meta Platforms had a program going where they developed some AIs that were actually communicating with each other, and they had to shut the program down because they discovered that the computers had actually developed their own language in order to not be detected by the humans. So that's a little scary, right? They
It didn't
actually
take them long, did it? It didn't take them long at all.
no. So, all right. So with Google, revenue is still under pressure from weak advertising demand. Earnings per share came out as $1.05 per share versus $1.18 expected. Revenue was 76.05 billion versus 76.53 billion expected. So kind of big misses there. YouTube advertising revenue 7.96 billion versus 8.25 billion expected. Google Cloud revenue was down to 7.32 billion from 7.43 billion expected. And traffic acquisition costs, this is a big thing when it comes to revenue. Companies that get revenue from advertising you'll see it as TAC oftentimes in the earnings. And that was $12.39 billion versus 13.2 billion expected. And traffic acquisition costs is the expense of gaining qualified traffic to your pages. So advertisers are actually liking the fact that that's down. But YouTube advertising revenue, that's short of analyst expectations. $7.96 billion. That's not good news for YouTube right now, especially when they're still in competition with companies like TikTok and Instagram and all that, and YouTube TV. So
that's not much of a miss, man. You're talking about 500 million when they're talking about a revenue of 79 billion. That's what, a 1% at most, like 0.87%. I mean,
the problem here was the profitability. The earnings per share was kind of a big miss there.
Yeah, all right. So I mean,
their
costs.
I'm still happy with it, but
so this goes back into what we've been talking about, is the cost that these companies are seeing due to inflation has risen. So now that the revenue numbers can still be high, the costs are cutting into the bottom line numbers. This is what's hurt. This is why Google had all those layoffs, and we were not seeing those layoff numbers affect this earnings report, but the next earnings report, you'll see no longer that kind of payroll on Google, and that could be that 500 million right there. But you also see that with other companies like we talked about earlier, Chipotle and a few others, high inflation is making these companies cut costs so they can raise their bottom line, because the top line sounds like it's staying even or just a hair up, like 4% up, but with inflation at 6%, you're actually down 2% net. Yeah. And so it's companies' costs are just up too high for them to maintain.
And at the same time, they're actually having to deal with a situation that they would normally have to deal with during deflationary times, and that's a strengthening dollar. Because the Fed is raising rates so fast that the dollar is increasing in value as we speak, and that's a good thing when it comes to the battle of inflation. But for multinational companies that have to deal with currency headwinds, it's not such a good thing. And we'll get a little bit more into that when it comes to Apple. But for now, let's talk about Meta. Meta, I am so happy right now because
bet you are.
After a year of getting my butt kicked in this stock, I am now up very nicely, and I'm very happy that, and it just comes down to you have to know what you own, right?
Diamond hands, Brandon.
But it's hard to have diamond hands if you're not confident in what you're doing. And it's easy, like if you're down 15 to 20% on something, to sell it because you get scared. But if you're confident in what you're doing and you know what you're doing, you've taken the time to research and learn and know the companies that you're buying, rather than just even just taking my advice for it. I recommend stocks on this program so do you all the time, but we tell you to do your own research, because you have to know what you're doing and what you're buying. Otherwise, even if we're right, you're more likely going to panic sell when you're down. So, holding Meta, well, turns out market pays for patience. Mixed earnings here, but it just wasn't as bad as what people would expect. It had gotten beaten down so badly that the apocalypse had been priced into Meta. and it turns out Meta's not going out of business. Facebook isn't going anywhere. 2 billion monthly active users.
That's a lot.
It's a lot when you think about the fact that there like 7.5 billion people in the world.
Yeah, that's 25% of the world are using Meta.
Yeah. So
Facebook.
Q4 revenue came in at $32.2 billion. It beat expectations of $31.7 billion. Earnings were $1.76 per share. Missed expectations here by about 20%. Expectations were $2.20, but they announced a $40 billion buyback plan. I like it as a shareholder. Publicity is not so good on that. I don't think when you're announcing layoffs and then doing a $40 billion buyback plan, maybe wait on that. But it is what Wall Street likes it for sure. Go ahead.
All right. So the buyback plan, the reason why a lot of companies are doing buyback plans right now is because Biden administration is currently trying to push through a plan, and he should be talking about tonight on the State of the Union, and that is to go ahead and tax these buybacks and to penalize companies to use the profits for buybacks because they want them to use the profits for other things. And so a lot of companies right now are using any kind of profit they have to do buybacks now so that they'll in case the administration is able to push this through, that they're not going to be penalized for doing buybacks later on.
And let me say this because I accidentally said monthly active users. It was 2 billion daily active users.
Thank you for that correction.
The monthly is even higher, and that's probably like half of the world that's a monthly active user of Facebook. So, the expectations there were 1.98 billion. So a slight beat there, but it's a very impressive number. Family of apps, that's the Instagram, Facebook, WhatsApp, Messenger, all that stuff. Daily active users 2.96 billion. Reality Labs was an operating loss of negative 4.28 billion. It was another like $280 million dollars in losses there than what was expected. But at the same time, we do expect Reality Labs to continue to lose money probably for the next 5 to 7 years. And that's all that was already laid out, a few years ago by Mark Zuckerberg. He said, it's going to be probably about 10 years where we're losing money on this, but it'll eventually pay off. He's really looking really long term here for the metaverse. FY23 Q1 sales are now forecasted at 26 to 28.5 billion, and that's actually going to be a decline of 14%. So here's the thing about this, you got to kind of look underneath the hood. We're expecting a recession this year. Rates continue to increase. Currency headwinds continue here. But when you're looking at a company that's got 2 billion daily active users, for sure, when we come back on the rebound, advertising revenue is going to go way up. So even though this year, the guidance quite frankly kind of sucks for this year, you have to look out further. Okay, what's going to happen after, a year from now, 2 years from now? And I still think even at this price for the stock, I think it pays off nicely.
A lot of companies are given lower guidance for the year. And that's another reason why I think people buying in right now and driving these stock prices up when companies are coming out saying, hey, we had a great fourth quarter, but this year is going to be rough. And it's going to be rough at the beginning of the year. I mean, that tells me I don't know if you should be really buying into every company right now. I would be picky and choosy. I'm especially blown away, Brandon, by what I saw in those numbers of option calls for months down the road. I'm just like, why? Yeah, you're that's months down the road. We don't know the latest inflation number. You don't know where it's at. We don't know where everything's headed. That's risky. That's risky. If it pays off, great. Everybody who did it is a very smart person, smarter than me. But if it doesn't pay off, you could lose just as fast and just as much.
That's the nature of that game with the options. They pay off It's amazing. You're the most intelligent person in the world. And then you make another bet the next day and you're an absolute idiot.
Right?
And here's
Yeah,
the thing, your bets, you could actually be right with options, but if your timing's off, then it doesn't matter.
exactly.
So
Yeah, the timing is key with that, and it's just I don't know, man. That was kind of risky for to see that kind of volume. I bet you a lot of people are going to be selling those calls here shortly.
yeah, if I would have been playing meta with options, I would have lost my shirt for sure. That's the beauty of just buying and owning a stock, because if you make the correct prediction, it really doesn't matter what your timing is necessarily. Only in that, like, you're trying to buy it when it's at a good value and you're trying to time that a little bit, but you've got much more leeway with it. You've got
Yes,
much more time to let it pay off.
and you could
Apple
always DCA, dollar cost average.
dollar cost average, yeah. Some people say DTF. We see. I'm going to cut that.
Wow, wow. 100 episodes, everybody, and Brandon finally broke.
All right, Apple earnings. Back on track. Revenue, set $117.2 billion. It's down 5.5%. Dave, oh, what are they going to do with only $117.2 billion? This company is, oh man, they're bankruptcy, Dave.
It's crazy.
Net income, $30 billion, down 13%. Year over year. Profit margins down 26%, and it's down from 28%. So it's down 2% actually, down to 26%. And it's driven by lower revenue. That's kind of obvious. I don't know why I added that in there. But EPS $1.89, down from $2.11 year over year. Steepest decline in sales in more than 6 years. Go ahead. Yeah.
Did you say 13 billion net income?
Yeah.
That's ridiculous, man. That's what some
No,
major
30 billion.
30 billion net income. That's what some corporations don't make revenue in a year. They just made an income in one quarter. I mean, give me a break, dude. This company is a monster. A monster.
And it was a bad quarter for them. Steepest sales decline in more than 6 years. But, here's the thing. You look at the stock, and it really didn't react much to it. In fact, it's up now. And we're giving Apple the benefit of the doubt. They said iPhone 14 Pro and Pro Max shipments were impacted by pandemic-fueled production constraints at the Foxconn facility in China. Major currency headwinds for them as well. And I think the bet here is that this is all temporary. It's not company specific to Apple. There's nothing in particular wrong with the company. So why not just buy it anyways? Because eventually this is going to go away. Now I'm skeptical that they should stay at Foxconn in China. I think that just brings more problems in the future.
So they have contracts, and they have to live up to these contracts or buy them out. Do they have the cash on hand to buy them out? Yes. Can they buy a company such as like IKEA right now with their fourth quarter profit? Yes.
Yes.
But so Apple has like so much money on hand, they could buy out these contracts, and they're making so much profit that I think they need to build some plants closer to the United States, where their biggest consumer base is. And I think there's a lot of other companies right now that have agreed to build manufacturing plants in northern Mexico. Apple should probably look at doing the same and bring some jobs back to North America, man. And I think that's the route that they should take. Will they take it? No. Foxconn, that deal with them so lucrative. That's where they're making so much money. Right. And it's just, let's continue working with a company that has to put suicide nets outside of its towers, because it's such a great company to work for.
Yeah, it's not only that, but then you have situations like the spy balloon or weather, whatever it was that flew over the United States that caused all that. The thing is there's going to be political pressure whenever there's China involved now. And I think that's also a headwind and a risk.
Yeah, and I get what you're saying, and it could be a headwind and a risk to Apple and to their contracts and their involvement overseas in the Asian markets and manufacturing there. But I think there's options available. I think Apple's going to continue to make massive profits no matter
Yeah,
what.
I think so too. I
And
just think they need to move away from China because that's what we're not going to attack China and try to go to war with them. That would just be suicide for the both of us. Not a good idea at all. But we're going to attack them economically, and they're going to respond, right? And the
yeah,
biggest thing that they could respond to would be to hurt Apple, the United States' biggest company.
yeah. No, so the United States' biggest company is the number one company in the world, which is Walmart. Sorry.
Is it bigger than It's not. Well,
Yeah.
not in market cap. Market cap, Apple's bigger.
I believe Walmart's number one, Amazon's number two, and Apple is up there.
Is it really?
Yeah.
Okay. Well,
Yeah.
Tim Cook said on the earnings call he believes the company would have shown iPhone sales growth actually had it not been for the supply issues. So,
Continue talking. I'm going to Google this right now just so we could be correct.
Mac sales declined to $7.7 billion from $10.9 billion year over year. Analysts were looking for $9.4 billion as their expectation, so below year over year and below the expectations too. Dating back to December 2017, Apple has only missed revenue expectations twice. Here's why I love this company. Both times now, they have given a warning prior to their earnings that they were going to miss expectations. So, one of the most transparent companies on Wall Street. And as a shareholder, I love that because you know what's going on with the investments that you have in Apple at all times. Now, the CFO, Luca Mastri, I think I'm saying it right, said that significant foreign exchange headwinds, supply constraints on the iPhone 14 and iPhone 14 Pro Max, and a challenging macroeconomic environment contributed to the misses this quarter. Mac growth negatively impacted by economic conditions and currency headwinds and tough comparisons to a year before. Let's not forget, we're still kind of facing, year over year comparisons to the tail end of the COVID situation when electronic sales were crazy high. Go ahead, Dave.
So first things first, you are correct. Apple is the number one American company by market cap. I was incorrect. Microsoft is number two, and Apple and Alphabet, Google is number three. So it's Apple, Microsoft, Google. 1, 2, 3. Berkshire Hathaway's up there in the top 5, by the way.
My Berkshire, probably my Berkshire for my cold dead hands.
I will say that Apple right now. What's the current price on Apple? Do you know?
156 is what I'm gonna guess, but I don't know.
154. Man. I think it's gonna dip back down to 150, 140s before it goes up to about 180 again, and that's where it's gonna peak. It's been bouncing around that range.
Yep.
140 to 180. So it's probably gonna make another run at 180, but is it gonna make it right now? I don't feel comfortable saying yes.
I don't think anything's gonna run that high right now unless we get more good inflation news.
Yeah, like I said, we need inflation number to be really drop a significant amount below 6%. I would like to see below 5.5%, but below 6% would be good news. To see a 5% inflation number would be excellent.
So speaking of Apple, they are down over the past 12 months, 10.63%, but up 20% to start this year. So big rebound in Apple shares right there.
That's what.
You
Go
could
ahead.
be chasing the dragon. You could be chasing the dragon here if you buy right now.
And that's exactly the point I was going to make too. It's gapped up, and so anytime a company gaps up, you want to wait for a pullback or some news. You got to have some kind of catalyst, some news to drive it up more, or a pullback and buy on the dip of it. Yeah. Because like you said, Brandon, you're just chasing the dragon. It's already gapped up. You're hoping it's going to gap up again, and you're going to hit the next bubble. But I mean, it already jumped. So it's already made its move. Unless there's other news that happens, it will probably float around this mark until the next news or something else, some big news, inflation news comes out and it's great or something.
But I mean, it is in a great situation to capitalize on any opportunities that come from a potential recession.
Yep.
I mean, the amount of money that this has sitting, I think it's around $100 billion. It's just absolutely insane. It's a mountain of cash. It is a cash generating machine. It will for sure survive any recession that we have and thrive afterwards. So if you got 20-year time horizon, it doesn't hurt to buy it now. But if you're trying to time it, and do a swing trade on it, probably not a good idea.
Yeah. Too risky.
Let's get into a stock that used to be one of my favorites on this show. It no longer is. Its balance sheet is an absolute mess.
Let's bust through this. Let's bust through this one.
Take-Two Interactive. It hurts me to say it. I love my Red Dead. I love I love the GTA 5, but Dave, they are just banking on GTA 6 saving this company. That is the bank. That is they're swinging for the fences with GTA 6. If they miss, it's going to hurt really, really bad. Their profit did increase to 29.5% year over year. I'm sorry, it increased 29.5% year over year to $715.9 million. That's all right for them. Gross margin 50.9%. I like that number too. However, operating expenses surging 122.9% year over year to $888.8 million. This brings us to an operating loss of $172.9 million versus operating income last year of $154.1 million.
So I want to jump in real quick. First of all, I wouldn't buy Take-Two Interactive. They have two big games, Red Dead and GTA, and that's it. They need to come out with something else. But I do want to talk about what you're talking about, operating income. That's what a company.
You go ahead, go with that. I just want to say that NBA 2K23 is kind of a big game.
Okay, NBA 2K
games are kind of big too, but they're just not making any money off of it right now.
I thought EA owned NBA 2K. Sorry, apologize. So operating income, that's what it costs, like a payroll, electric bills, leases on land, yada, 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 just to operate your business. You can also see that number if you're listening right now and you hear the term EBITDA. So the earnings before interest, tax,
depreciation,
and asset. Yeah.
It's earnings before income, taxes, depreciation, amortization.
Interest, taxes, depreciation, and amortization. So that is also a good tell of operating income because you want that number to be positive. So if that number is positive, it means they're actually operating as a positive. So then the next number you look at is their actual earnings number and not the EBITDA number. But if they're operating at a positive, that means they're not just digging their hole. Because if a company has a negative EBITDA number, that means they're just digging a hole every year because they're operating at a loss. And you never want to see that unless there's a good reason for it. But there's very few good reasons for that. That's usually a bad sign of a company. So you want to see EBITDA number be positive, and then you can dig into it more. Sounds like Take-Two Interactive has a EBITDA problem right now, and they need to fix it. Yeah,
$1.46 billion in cash sounds nice until you see a debt of $3.09 billion. That's rough.
Well, I mean, every company has debt, and debt can be healthy. It depends on how you use it and what it's for. It would be a perfect world if they didn't have any debt and they just had cash on hand, right? But we don't live in that world, and every corporation has debt. Apple has some debt and corporate bonds out there that they owe money for. They could pay them off right now, probably, but every company has debt. That's not necessarily a bad thing, depending on what that debt was used for.
They're expecting another loss between $1.27 and $1.17 per share this coming quarter. Net bookings projected between 1.31 billion and 1.36 billion. I just don't see it. If GTA 6 is as giant of a hit as we all expect it to be, then great. But they are really putting all of their eggs into that basket. And even know if we have a release date on this yet. I don't think we do.
Yeah. They need some job cuts is what they need in order to cut back on the operating costs.
They announced job cuts. They also said the word efficiency because when Mark Zuckerberg said it in the conference call, Meta's stock jumped even more at that point in time. So I think that, every tech company or gaming company right now is making a point to use the word efficiency because Mark Zuckerberg said the year of efficiency and everybody went crazy.
It's a buzzword right now. It's a buzzword. It's a new buzzword, corporate buzzword, efficiency. All right. All right, man.
That's all I've got. So, Google and Meta and
Final thoughts, Brandon. Final thoughts.
Earnings here on those three companies, just they weren't that great, but I think you could take a chance on these companies still and say, hey, we're going to get out of this, and none of this actually is a result of company specific problems. Yet when you look at Take-Two Interactive, I think it's more evident that it is a company specific problem. And so this is where you become more selective in the stocks that you're picking and the opportunities that you're taking as things are beaten down. You take the opportunity with the Googles, the Metas, and the Apples, but you leave the Take-Twos to other people. Don't touch it.
Gotcha. What I'm looking at, guys, is right now, because the real estate market is taking a hit. Mortgage homes are not moving as fast as possible. Mortgage rates are extremely high. I'm looking at maybe possibly getting into some REITs. That's a good way to enter the market because they are also beaten down, and
it's an interesting play because they are so beaten down. And I think, and I don't mean to interrupt you here, but I think that it's a counterintuitive play because you think, oh, if we're going to go into recession, interest rates are going up, housing sales are going to slow. But if you believe that the REITs have been beaten down so badly that that's all been priced in, then yeah, it's a good play.
Yeah, and that's where my head's at with that. Another one I'm keeping an eye on, guys. I'm not going to get too excited about this, and I'm probably not even going to spend some time on the podcast on it. But I do want to mention my final thought is
Blink.
Well, Blink is always on there, and it's been beaten down. And right now, it's below $12 a share, and I'm thinking about buying it for a swing trade on Blink. But I'm also keeping an eye on Riot Blockchain because Bitcoin is now back up. It hit 24,000 recently. It's back about 23,000. I do believe that the cryptos are will move with the market. So if the markets move down, the cryptos will move down, and that would be a time to make a move into Riot. At that moment, I would look at it probably below $6 a share. That's a penny stock price, but I feel confident, in that one. I wouldn't put a lot of your portfolio in it if you're going into it. But the REITs are definitely one I'm looking at. And yes, Blink below $12 a share right now. It's probably a good time to go ahead and put some money in that one as well. In fact, that one's going to be a definite call. Bing, 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 definite call. Blink, go ahead and buy it.
Okay.
1170 was where it was at last time I saw.
All right.
All right. Well, as always, we hope we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.